Hello traders, this is your trader's friend. Thank you for joining me for another video today. Today I'd like to talk to you about the importance of support and resistance. You have two kinds of support and resistance. You have your horizontal support and resistance, and you have your diagonal support and resistance. We call your horizontal support and resistance simply support and resistance. We call your diagonal levels trend lines. Now let me show you how to handle these levels. If you get down here to an area of support, what you're looking for is an opportunity to go long or to buy. This is where you buy low. So that's what you're looking to do. Once price has been rejected at that lower level, you're looking for an opportunity to buy. That's what you're looking for. Here at your resistance level, what you're looking for is an opportunity to short the market or either to sell. At your support level is below price action and you're looking to buy. Your resistance area is above price action and you are looking to sell. Here's a beautiful example of resistance. You have this strong bullish move up. You pierced your resistance level and then price was rejected at that higher level. Your next candle went up a little bit further, but price was rejected even stronger and you closed in a bearish candle. So what it is you're looking for is an opportunity to go short, and you see that that ended up being a perfect shorting opportunity. Now, remember, price does not always bounce off of resistance and support. If price had closed above this resistance level, then you would have looked for an opportunity to go long. But since it didn't and you see rejection, you were looking for a shorter opportunity. If price had closed below this resistance down here, then what you would have been looking for was an opportunity to continue to short that market. But we see that price did not close below this support level and it was actually rejected. So what you're looking for now is an opportunity to go long. The reason I'm bringing you this video is because the other night I did something dumb and I'm going to show it to you. I'm going to blow up price action so you can see what I did. The other night, this is the USD JPY 4 hour. I took the opportunity to short this market. I'll tell you why. My trend line is bearish. My MA is bearish. My price action was bearish. This is a demo chart, so I'm not even sure if I have the moving average on my personal chart, but I know I put the moving average up here the last video that I made. But at any rate, I have all of these things that saying it's okay to go bear. Now, the reason I did take this to the short side is because I got this little bullish bounce with no confirmation to continue. So I decided, okay, I'll take this trade to the short side. And once my candle closed here, I decided, it's not the strongest signal. I'm going to go ahead and take it. Now, either immediately after I made the trade or right before, I saw this resistance level. But I decided, I have these other confirmations. It's only a 4-hour chart, so I ignored it. Well, you can imagine my surprise when I woke up the next morning and I had been stopped out. The good news is I'd taken 2 trades that night, and my other trade was so much more profitable than my loss. I ended up in profit anyway. But I'm bringing you this video to remind you to please respect your support areas and your resistance areas. Now, what I discovered, because you know that I go back and I study my charts, I was wondering why it was I got stopped out. Well, I knew, but I decided to investigate a little bit further, and guess what happened? What I discovered is I had hit a long-term support area. So this is a support area from 2008. It's probably before that, but you can see in 2008, in November 2008, it hit this support level, bounced off, and went back up. Here in December, You see it hit it twice in December. It pierced it and kind of closed below in December. It hit it again in January with no confirmation, and then price bounced off and went on a nice bullish bounce to the long side. Well, again, we hit this level in September of this year. We hit it again in October, and then we bounced off of that level, and here we are again. So the 4 hour resistance that I chose to ignore actually turned out to be a long-term support area. And so my reminder to you is to pay attention to your support and your resistance areas. Now, I also want to point out something else to you. Like I said earlier, your trend lines are support and resistance. If you are in a bearish trend, then your trend line acts as resistance. And you can see where price hit that line, it was rejected, and it fell back down to the bearish side. You can see where it hit again and it fell down. And what you'll notice is that trades in harmony with your trends are much more profitable than trades going against a trend, as you can see. Now, I've showed you a bearish trade, and once you hit a resistance level, what you are looking to do is you're looking for a shorting opportunity unless your candle closes above your trend line. Since I've shown you that, I also want to show you a bullish trend line, because here this diagonal line, your diagonal trend line, is acting as support for price. You can see it's drawn below price, and price continues to stay above it, and it stays above it beautifully for a long time. And you can see once it gets close or either it touches it, then usually what you get is a bounce off of that level and price continues to the long side. Here you actually broke below it. You got a reversal candlestick pattern. Price went back long again, and you can see you kind of stay along that area for a while until you get a full break, and then price goes the other way. But your trades in harmony with your trend are going to be your safest trades. Be sure to pay attention to your support and your resistance area. I'm here to tell you that there is no trading method that's perfect. What you are seeking to do in your trading is put the most odds on your side. Any trade can get stopped out. I don't care how good your analysis are. I don't care how good your technicals are. I don't care how good your fundamentals are. I don't care if every indicator in the world is saying you should go long. You can still be stopped out. So what you're doing is you're putting the odds the most in your favor when you take a trade. So take your trades in harmony with the trend. Respect your support and your resistance area until price gives you the okay to ignore those areas. Guys, you can do this. You're listening to someone who's been broke twice and was just a few dollars short of going broke the third time. So I kind of have an idea of what I'm talking about, and it took me going broke almost that third time before I realized what was going on in the market. Now I trade 5.5 days a week. If you need me, I am here. I'll do my best to answer any questions you may have, but I want to assure you, you can do this. It's not that hard. It's frustrating and it's tricky, but you can do this. My friends, thank you for joining me for another video. Live well, have fun, and love hard.